we've been asked to classify each of the following transactions into capital or revenue. Now, all the transactions that you see here are to do with what we call capital expenditure or revenue expenditure. Capital expenditure is expenditure incurred on the acquisition of a non-current asset. Okay, and it will include all the installation costs, all the transaction costs, brokerage costs, okay, anything and everything to do with bringing the asset to the place where it is going to be used, setting it up. Okay, when we think about revenue expenditure, we mean expenditure to do with the day-to-day running of the business, okay, which happen on a periodic basis. So capital expenditure is a one-off expenditure which normally increases the capacity of the business. Revenue expenditure is a regular periodic expenditure, whether it is daily, weekly, monthly, yearly, okay, and does not increase the capacity of the business. Based on that logic, we will now look at the different transactions. Legal fees on acquisition of land. Now, the land itself is what we call a non-current asset. So if you spent money on buying a non-current asset, okay, it will be considered capital. It will be considered capital expenditure. All right. Now, under normal circumstances, legal fees would have been revenue, but because if you have used it to, it's legal fees towards buying land, it becomes capital. Complete repaint of existing building. Okay. Now, repainting of buildings happens, if not every year, every couple of years. It's a periodic expenditure and it does not increase the capacity of the building. Okay. And therefore, it is revenue expenditure. All right, so you have to use logic while deciding. Repainting of the delivery van will use exactly the same logic. It does not increase capacity. Okay, it is a periodic expense. So we have again revenue expenditure. Next, providing drainage for a new piece of water extraction equipment. Because it is new, that means you bought it recently. And if you're spending money on providing drainage, it is a form of what we would call, okay, we would call this a form of installation cost. And therefore, it will be considered capital, capital expenditure. Now, the last one, carriage costs on a replacement part for a piece of machinery. Now, this machinery is assumed to be an old machine. If you have a replacement part, okay, even though uh, you would argue that that part is going to be with you for many years into the future, yes, but it does not increase capacity. It frankly makes sure that the machine remains at the original capacity. Okay, and for that reason, and that reason alone, we will consider this revenue expenditure. Okay, any doubts, feel free to message. And as always, please like, share, and subscribe.